Here it
sir.
is, folks. What you've been waiting for on this Wednesday. Options Unchained with CC Lagator on Pre-Market Prep and the Stock Trader Network. CC Lagator, how is your week going? How's your day going?
Good, good. It's an interesting market in that every time it looks like we get down to the bottom of that range we've been in all year, a bunch of negative news stories hit, or at least start getting circulated to like justify it maybe breaking down at that point. And here we go again, another bounce right into the Nvidia earnings.
Let's go heavy on Nvidia here today. We'll get to Nvidia a little bit later, just a little bit later, but that's where we're going to focus mostly today, folks. We will talk about some of the software names, the IGV. We do get Salesforce later. We do get the Snowflake a little bit later. So we are going to get into that a little bit, but I am looking at my VIX chart, VIX, traded up to around 22 yesterday. And here we are down to around 18 as we await the Nvidia earnings, which are expected out around 4:20 p.m. There feels like besides Nvidia, besides software and AI disruption, besides the State of the Union, which is kind of past us now, it feels like even with the VIX down here around 18, it feels like there is some little bit of premium that's happening in the VIX. And CC, you and I were talking just before we jumped on, and you were like, I think it's Iran as the X factor. What are we going to happen? What's going to happen with the US and Iran? Are they going to come to a deal, hopefully, or is there going to need to be, some more aggression by Trump? What do you think about this?
Yeah, I would almost argue that there's a couple of points of extra premium in the VIX right now. And it's been sort of hanging around the last, 2 weeks. The volatility we've seen in the market has not been that different than we've had for the last couple of months, right? We're still in this range. Every time we challenge that 6,800 level in the SPX, it gets bought. So the sort of, we talked about it last week. It is a weird market. There's tons of divergence under the surface. And that's got people a little spooked. We saw a little bit of it this week with the financial stocks, which was like on top of the software stocks, on top of, so that AI disruption theme isn't going anywhere. It's going to be around all year. However, when I've been looking at it the last week or so, I'm like, it must be Iran, because the VIX has really kind of been hanging out around 20. We're seeing it spike, as you mentioned, to like the 22 level or something when we go down and test those lows or get near them. We didn't even test them this time the last couple of days. So the only thing I can put my finger, well, there's two. There's one is the Nvidia, right? And we're going to get into that in a few minutes about like just, the market effect potential that this report has, as it always does. But I think it's the Iran stuff. I think they have a meeting tomorrow. And if things cool, you want to look at something with no volatility over the last, few days, it's been oil, right?
Yeah.
So oil did that move leading up into all of this. Let me just check it right now, see where it is. 67. It is absolutely flatlined at 67 this whole week. And it's just sort of like, it's in wait to see what the next developments are in Iran.
Yeah.
So, which none of us know. None of us know how that's going to play out. None of us know exactly what the market reaction would be. It depends on what happens right there. So if there's, a deal made and there's absolutely no military action, clearly that's bullish. If there's limited military strikes, which I think has been floated more over the last, over the weekend and everything, that's probably arguably an initial reaction. But then very similar to last year when this same thing kind of happened, you'd probably see a buy the dip. So the only kind of long-term, or not long-term, but medium-term bearish argument out of that would be some sort of quagmire, right? Where it's a bit of a disaster.
Yeah.
So That's where I am on the Iran thing, but it's like, people can't avoid that overnight risk. And I think you're seeing that in the VIX. The VIX is looking out 30 days, and it's basically saying at some point we are probably going to have an overnight headline, right? And that's my guess of why it's still bid.
And it's kind of weird because, like, we saw a headline today. It was pre-market. It was a headline that normally would move oil for sure for a couple reasons. The headline was that Saudi Arabia boosted their oil output and exports as a contingency plan for the US potentially attacking Iran. And guess what happened with oil? It didn't move a wink. It didn't move at
Nothing.
all.
You look,
So,
I'm looking at a USO chart right now.
okay.
So we had, if you want to pull that up, we've had this run up. This was the beginning of the Iran shatter, I would say, the military buildup when the market first started, kind of taking it seriously, I would say, like mid-February. We got up to, the 80, 81 in level in USO, which is about where we are in crude at 66. And we've gone sideways since then. So this is also, I mean, this could explain the VIX chart. Is oil got up to this high, has gone sideways, so has the VIX, more or less. Now, today's rally, I think, is fairly it's the first day where we've sort of seen the VIX kind of go, all right, it's now down to 18 and a half or whatever it is right now. I think under normal circumstances, if we did not have Nvidia tonight and we didn't have the Iran thing hanging over us, I mean, this thing would be 16 after this bounce, I think 16 and a half, something like that. So there's a couple of points in premium. If we look at, if we want to go to the card for the expected moves for the next week,
Sure.
we have, it's not that different than last week. I will say that the majority of this move, particularly in Qs, is for tomorrow. And you can see it's almost half of the next week's Qs move is basically priced for tomorrow, and the reaction to Nvidia plus the software stocks we have going, after the bell software cloud. But what I would say is interesting about Nvidia in particular is if we go back to my charts and we'll just look at the Nvidia expected move chart right here. It is kind of fascinating because it has been in this range, right? For like, discount this high, take out that November, late October high spike. And we have been in a range, you and I talked about it last week, from about, call it 165 to like 195 or something. And particularly in the last couple of months, the expected move for this earnings event, which is about somewhere between 5 and 6% in the stock, basically takes you back to these highs. And that's pretty fascinating because you can sort of picture a scenario where Nvidia goes and tests this breakout high from back in the fall. And if it were to hold, that is a massively significant move for the overall market. And it is likely the type of move that could finally break the SPX out of this multi-month range we've seen in SPX. And everybody's been, we say this every quarter, it's so important. Nvidia earnings are so important. I think to the upside, they are massively important because it could finally be the thing that breaks us up above 7,000 in SPX. To the downside, it's a little less significant. If Nvidia, we're up near the top of this range we just mentioned. If Nvidia were to pull back $11, $10 on this earnings, even if it didn't happen overnight, even if it happened over the next couple of days, we're just basically right back in the range for Nvidia. Range. And then all those other stories that we keep talking about every time the SPX hits 6,800, we'll start talking about those things again. But right now, to the upside is where it's kind of fascinating.
And you were pointing out too that, like, keep in mind the SMH is all-time highs here. So there is, there is optimism elsewhere. And I think it is important to just consider it in the context of Nvidia tonight, around 4:20 p.m. Eastern time.
4:20. And if we go to that light blue card,
okay,
this sort of like highlights what I was teasing right there about the move, particularly to the upside. Is let's call it about a 5.5% expected move, $11, maybe a little bit more.
Yeah.
It's that, again, that's what I mentioned. It takes you back to those October highs. You will all of a sudden, everybody would be like, man, is this thing just going to rip higher? Is the party back on in Nvidia? It's been a while. Nobody's been able to like really celebrate anything in Nvidia since last summer when it kind of topped out. The magnitude of that sort of move, $10 to $12, let's say, after hours, is by it in itself a 0.5 percentage point in the SPX and even more in the Qs, right? And then to your point, imagine what SMH does on that, and like the Broadcoms and all of the world with it too. So clearly, if we were going into tomorrow morning with Nvidia up $11 or so, the markets, the pre-market indication is going to be the SPX up 1%, right? And that takes us, we are let's see, the highs, call it like 7,000 roughly, the highs in the cash. That's less than 0.9% away, right? So if Nvidia moves to the upside anywhere near in line with the expected move, we are going to be up at 7,000 tomorrow morning, and everybody's going to be like, is this the big one, right? And then we're all going to be sitting there being like, all right, how's it reacting afterwards? Are sellers showing up? Because you're going to see this pressure from multiple fronts. You would see sellers in Nvidia because it's near its all-time highs, and you would see sellers in the SPX because it's near its all-time highs. And that's where you kind of get into a fascinating point. At the bottom of that card, I mentioned the Qs. Qs aren't near their highs because of all the wreckage in software, right? So let's picture a scenario where we're at 7,000 in the SPX tomorrow morning. Nvidia's at 207 or 208 or whatever. And the Qs are still shy of these highs, right? Because that's interesting, because then you start looking to, is the software sell-off over? Well, we have some names reporting after the bell.
Right.
Right?
CRM, Snowflake, Trade Desk.
Right. So then imagine a scenario where the 2 out of 3 or all 3 of those are higher on the day. And we have gotten a couple of examples, not in the same scenario, but like, I think you all this morning were talking about Circle earnings. I mean, that thing looked dead, right? And it's up 20-some% and it's held it, right? So then imagine a scenario where you have that SMH move, which in and of itself is enough to take you back to 7,000 in the SPX. Then imagine IGV finally looks like it bottomed. And if it ever were to do it, it would be probably like on a Salesforce. Salesforce sort of the
my gosh,
child, right?
You're so that's such a good thought. It's
now, having said all that, imagine them canceling each other out. Imagine the software story is not over. These things, maybe they get sold off, things like that. Then all of a sudden, everybody's looking at Nvidia's move to the upside in this scenario, and they're saying, I don't think that's enough. You know what I mean?
Yeah.
There's still cracks in this overall AI story. So there's a couple of scenarios. So that's what I'm going to be looking for, particularly tomorrow morning, is if we move to the downside in Nvidia, I think nothing's really changed. And it's like, all right, it ripped into earnings, sold off on earnings, probably gets bought somewhere, in the middle or down towards the bottom of that recent range in Nvidia. Nothing's really changed. And, the overall market is remains challenged, trying to find new highs.
Remains
to the upside is where things get fascinating to me, because we've all been, we've been waiting months. This is a 3-month SPX chart. Look at that.
Yeah.
I mean, just dead flat. And I will say, just, now that we've talked about the upside potential of a breakout and everything, it is very rare that you see on this like last 5-year chart. I was looking this morning for other scenarios where we've sort of gone sideways for this long and didn't actually see some, like a little bit of a rollover. It's hard to see any place in this chart that we didn't do that. So, that's the sort of, if Nvidia goes lower, if the sales forces and the software stocks go lower on earnings, and then we've got Iran hanging over us, we're probably going down and challenging those lows from the last 2 weeks. And in which case, it's only a matter of time if we go that way that we hold that. And that's where you could see the pullback, like that's significant in SPX. But I think that's a less of a percentage chance.
Yeah.
But it would be a little bit more violent, obviously.
Sure. Yeah. I want to get your thoughts on some commentary from a Wedbush analyst, buddy that comes on Pre-Market Prep every once in a while, Joe Kalina. Do you know of Joe Kalina?
Yeah.
I mentioned this commentary earlier. Maybe you heard it, but I want to get your take on it. So Joel was pointing to a D.A. Davidson analyst and saying, this is the kind of commentary that makes me very bullish on NVIDIA. This D.A. Davidson analyst calling NVIDIA no longer a bellwether and saying that the market has picked other AI winners. How do you feel about that sentiment from the D.A. Davidson analyst? Do you think that the market has picked other AI winners? Do you think that NVIDIA is no longer a bellwether, which I think is like a hot take, if you ask me?
Bellwether is a hot take, but clearly the baton for what's going to be how I'm going to make 200% has moved to the storage stocks and things like that, right?
That's a good point.
Good point. So there's always going, but from a market caps perspective, these things are like nothing compared to Nvidia. It's interesting, we have had the baton passed several times over the last year, right?
Trying to find a new owner, right?
So when Nvidia, we were just looking at Nvidia going sideways, since last summer. This is roughly where it was. This is a Google chart.
Okay.
Right? So Nvidia, I'm back in July. Nvidia has gone essentially flat since then, and Google has made this move, right? And before Google, or Alphabet, whatever they call it these days.
You call it whatever you want. We know what you're talking about.
Yes. So at the same time, this is July in, where I'm hovering, July in Microsoft. And then we've had this move, which is clearly caught up in the, the software hemorrhaging and things like that. I don't know of many scenarios near term that are of this overall AI story where Nvidia doesn't at least, that they're still not somewhat at the center of it. Now, the word bellwether implies that, we need Nvidia for the market to go higher. I think that's actually kind of true.
Yeah.
I don't know, trying to explain why the SPX can't get above 7,000. I mean, this is my best explanation, right? Is that we've seen all of these rotations in, and all this craziness under the surface and AI disruption and everything like that. But the SPX is, at least for the last 2 months is basically kind of mirroring Nvidia. So like when this was the February 5th low in Nvidia, and what did we hit in SPX that day? So Feb 5th, yeah. So every time we're down near 6,800, it looks the same exact way on this Nvidia chart, right? It's hitting down at these levels, and that's when and then Nvidia's ripping, I don't know what the tail is in the dog in this scenario, but clearly they're marrying each other. And now all of a sudden, look at this. And if that were to make that kind of move, you can imagine that the SPX would at least attempt a move up beyond 7,000. And at that point, things get kind of wild, because if software were participating, then maybe all of these last months of AI disruption, everybody's sentiment shifts towards, oh, this is awesome. This is an AI party now. It's not like an AI funeral anymore. It's been an AI funeral for the last, month at least.
Yeah.
I mean, even XLF, I got all bared up in XLF the other day. I was
Because
like,
of disruption concerns or because of the private credit thing?
both. So I sort of looked at the XLF move the other day, and it was that one where it was down like 3.3% or something like 2 days ago.
Mm-hmm.
And I was like, all right, if you're always trying to find in a market that's going sideways, like the SPX right now, you're like, clearly SPX or SPY hedges or bearish plays or anything, which are interesting to me because you're like, all right, I'm loaded up on all these tech stocks in my long-term portfolio. What's a good way to kind of, like hedge that? Like, is it SMH? Like, obviously it was the software, it was IGV for a while, but and then I start looking at, well, what would small caps do in that scenario or anything like that? So the other day, what got me thinking on XLF was the stories you just mentioned.
Yeah.
Anytime you see multiple stories, so you have the AI disruption, which is clear. Just go on Claude Code or Codex or whatever you use and recreate some of the things that financial services offer, right?
Mm-hmm. Yeah.
Like planning, taxes, just your own personal finance things, anything
Mm-hmm.
stock market related. My son has a project for school where he was doing, investments and tracking them. And initially I was like, oh, set up like a, Yahoo Finance or Google Finance thing. And I was like, what am I thinking? Let's just build one.
Yeah.
And we built one in like a half an hour. You know
Nice.
what I mean?
Probably was
And
pretty fun too.
just using that stuff. And then you can like, he's like, well, what if we added this? What if we added this? And you can
You're
just
like,
do it
that's how you
yourself.
do it.
And you're like, oh my God. So you have that scenario, or that storyline behind XLF. You have the the private credit, which it's a little above my pay grade.
Yeah, me too.
This is my take on that. And there is clearly a bubble in private credit that has built up over the last, decade, let's say, and it's particularly the last few years. Anytime, if you've worked in any aspect of Wall Street before, anytime you hear something like that, your sort of your spidey senses go off, right? It's like everybody I know is going and working at these PE firms. They're suddenly lending all of this money that we didn't even know about like a couple of years ago. It's a new thing. Your spidey senses go off that there's risk there. And there is risk there. And the reason is, this is going to be like deeply philosophical, Brent. Do you have
Let's
a minute?
go. Yes.
Okay.
So, I love this stuff.
The way Wall Street works is somebody starts doing something new, and then they start making a bunch of money, and then their competitors start to join the party and they start making a bunch of money. And then it gets bigger and bigger and bigger. And then all of a sudden, the standards of which it began with, you're chasing a smaller and smaller percentage of the overall pot.
Sure.
So you start taking more risks around that new thing. And then eventually you have some really like bad players enter the market. I don't know anything about Blue Owl, but like,
yeah.
So when you start to see headlines like that, you're like, all right, well, what's Apollo's risk? What's, KKR's risk? And it's basically that something new happened on Wall Street and it starts to get crowded and people take more risk and they're incentivized to take more risk because you generally don't have to get clawed back on the bonuses you got for the last 5 years, right?
Totally.
So anytime I see that, my spidey senses go up. I am not an expert enough to actually dive into it. And I've heard some very smart people saying that it's being exaggerated, the risks and everything right now. So I don't know. But I do know that the story is out there. So going back to the financials, you have the AI disruption, which is real. You have the private credit. You have the other thing, another thing above my pay grade is the whole stable coin and that whole story, which I'm not even going to get into because I have no idea. I don't pay attention to that stuff. But you have multiple storylines. So if we were to go lower, I would look to XLF. If the market is going lower, I think this will outperform to the downside because there's so many stories swirling around it.
Yeah.
And once it's all over with, it's sort of funny. I was thinking about this the other day because you know how Jamie Dimon, every time he's on, he's like super bearish.
Yeah.
It's sort of interesting because it's like, all right, if there was a big washout in some of the financial names and all, like which one do you step in to buy? You want your bank CEO being bearish. Like you want the dude that's always seeing risk everywhere as to the most likely indication, unless he's not paying attention to anything going on in his company, which happens. You know, that's the kind of name you want to buy. It's the people that are like almost more worried publicly about this sort of stuff. And he brought the whole, what was his phrase? It wasn't canary in a coal mine, but it was something similar metaphor.
Yeah.
The
other thing to think about here is like, especially for financials, and you just said it, but it like keeps getting deeper as far as AI disruption goes, because you know when IBM got hit on Monday, right? I think Monday.
Yes.
There was somebody that was making a bit.
Might have been yesterday.
Yeah, today's Wednesday. Somebody was making a bit of a different case, but like that concern that hit IBM, the COBOL thing. Do you know about that? Common business oriented language.
Exactly.
Like the top use case for that is investment banking.
And that was an Anthropic thing, right?
That's an Anthropic thing. Yeah, that's Claude Code. Yeah.
Man, are they crushed? I mean, dude.
It's
not to get like totally dystopian. Have you been following the fight that Anthropic's having with the Pentagon right now?
Like a little bit, but I mean, yeah, you know.
Yeah. Everybody watching, just go Google that story right now.
Yeah.
Because I don't know. Did you ever watch Black Mirror?
Yeah.
Or like any dystopian science fiction? So the Pentagon is wanting to use Anthropic for like some pretty serious stuff. And Anthropic's like pushing back, being like, that's a huge risk, right?
That you're going to give access to the agents effectively.
Totally. Which is, you know, and I just saw some story this morning that's like, if you give these agents access to like nukes, they are very prone to use them because they're not human and they don't fully understand. You know what I mean?
Oh my lordy.
Anyway, we're getting into some sci-fi stuff here. Anyway, Anthropic is just crushing it. And I just was bringing that up because it's a very interesting side note story, especially if you're a fan of things like Black Mirror.
Two more things that we kind of should be considering, and CC, you do such a good job of, you know, looking ahead, and you have a really good pulse for the market. And a couple other things that we mentioned that we haven't mentioned, you and I were kind of talking about, but I want to mention here on air. Bitcoin kind of being the proxy for where speculation is happening in the market. I was telling you, I don't have any Bitcoin investments or trades or anything like that, but just as a market watcher, it feels relieving to see some kind of relief rally in Bitcoin, even if it's just a little bit. And then the other thing I want to touch on a little bit is we have PPI on Friday this week, but then we have the jobs data for, I think, February on next Friday, 2 Fridays
next Friday. Right.
Yeah. Yep.
And so as of now, well, let's start with Bitcoin.
Yeah.
Bitcoin, I have always thought just from, you know, I've always just looked at it as like a kind of a trading vehicle, you know, without sort of commenting on the larger story. It is, to me, a little bit of a sign of at its highs, at its frothy, like the biggest frothy moments of Bitcoin mania over the last decade now, it's tended to coincide with this feels like everybody's excess money for risk taking, right? And it usually gets near the top of other euphoria that you're seeing in other asset classes and stocks and tech stocks and small caps and things like that. On the downside, it has to have, and we've seen this over the last couple of weeks, it has like a huge, it's just like a buzzkill, right? So as the market has been trying to rally, as like you've seen some of these other things, it's sort of been this thing raining on the parade where it's like, and Bitcoin's down lower. And a lot of people, it's not, it's not a huge portion of like the overall speculative money that people have, but it is from a sentiment standpoint. I'm sure if you went on does Wall Street Bets even exist anymore?
Yeah.
But like Robinhood, look at Robinhood's chart, and I would argue that Robinhood, and by the way, we mentioned Robinhood as a hedge somewhere back in here as a potential hedge, and the idea was, I think Bitcoin had started to top out, and this was the idea that if Bitcoin continued lower and you saw sort of other, if the market started going lower, that Robinhood would be especially hit. And that's to the point, I think, on Bitcoin, is a lot of this move was that. And it's not necessarily that Robinhood's earnings are going to go, they're going to have a huge miss because there's a lack of Bitcoin trading.
Right.
It's more that it's the same people. So totally. For Robinhood's demographic, watching their, Bitcoin holding get cut in half over the last, 4 months or whatever it's been, that's, they're much less likely to go and be buying, out of the money calls in SanDisk or whatever.
Absolutely.
It affects their overall risk-taking appetite.
Yep.
And to your point, I would say, if you did see, if this was a significant, if this was the big one, Elizabeth, and it's pretty significant today. What is it up? It's up 7% or something.
Yeah.
I'm looking at the Bitcoin chart in the background. It's a pretty significant development if this were to be able to hold. Now, of course, it has not held, multiple times over the last few months. But if it were to, and you were to see IGV, I think is the other interesting thing here. You think about all the stocks that are involved in this. I mean, people are down 70% in stuff that they thought was, invincible, like a Salesforce, right? You have the Oracle, the Oracle story and that rollover. You have Microsoft. If Microsoft were to be able to find a bounce here at 400, and you got a Bitcoin bounce, and you got everything we talked about at the top of the show, yeah, that's finally our breakout sign.
I am just looking away here for a sec, CC, because I was looking at a report I was seeing from about 20 minutes ago. Semaphore. Do you happen to know Semaphore?
Yeah.
So seems like they've been doing some pretty good reporting. I just am seeing an exclusive report from Semaphore about 20 minutes ago. U.S. government to meet with robot makers as China competition intensifies. I was kind of looking around to see if there's any stocks moving on this. I was going to just put it in the chat just to make sure it was on people's radar. Sorry for taking a little sec here. Let me just get this into the chat. If anyone wants to look at that article, I just put it in the STN chat.
That headline, it's kind of funny, right after we were talking about the Anthropic and Black Mirror and all. Can you even picture a year ahead in what we're if we were doing this show a year from now?
Yeah.
What the hell are we going to be talking about? It's going to be bonkers, right? And it's sort of that, you're talking about robot competition. It's robots, literally that's going to happen in the next year, we're all going to have like robots. Like, there's going to be a robot behind me a year from now if we're doing this show.
I don't know. Are you gonna? Would you pay 25 grand to have a robot standing
No,
by if you want it to serve you and clean up and
of
maybe
course not.
take your dogs out?
I'm just getting around to like getting an electric car. I just put in a got on the wait list or whatever for that new Rivian.
Nice.
So my son had been, yeah, we can talk. My son has been talking about, like, with his investments, one of the ones he wanted to buy was Rivian.
Okay, cool.
And I have a car that I need to replace, but I barely drive. I live in, a small city, so I can walk everywhere, and I work from home. So I have it's a 2015 BMW that I have 60,000 miles on it, right? But it needs repairs, things like that. So I was thinking I need to get a new car at some point. And my son, one of the stocks he wanted to buy was Rivian. And he's like, because of their new car, their R2. And I kept sort of saying, oh, all right, well, I'm not buying $100,000 Rivian to drive 4,000 miles a year.
Mm-hmm.
And then I finally looked it up, and I was like, wait, they're selling those things for 40 some grand.
Is that like I didn't even know.
That's the new thing.
Oh, sweet.
So I put my name on the list. I was like, that one I'll get. And so anyway, I bought Rivian stock alongside, so hopefully it'll help pay for it.
If it makes you feel any better, some of the audience members are sharing the same sentiment that we are. Like who has 20K plus maintenance for a robot? They're not for us.
Take over, run off with your wife, take over your house. Like, nobody needs that. But yeah, for the maintenance of your robot, I think there's a big one, Elizabeth. Quick.
Anything.
Listen to that one. So we're going to have to come back to that tomorrow. If Nvidia does go up 6%, I mean, that's the big one. And we got to use that one tomorrow.
It's a big one, Elizabeth. I'm coming for you. Felicia had a pretty good setup here for you, CC. Yeah. CC gave us some, if we're cool to go on to a audience question or two. CC gave us some good protection ideas in the past for SPY. Can you create one for the Qs?
Yes.
Felicia looking at the trade. I guess maybe just giving a little reminder here that maybe the trade you set up for us in the SPY was end of March, 750, 650 puts.
Yes. Let me just look at that real quick to get sort of a corresponding level in the Qs.
Yeah.
Not that I'm going to like calculate the beta or anything, but like I believe that, so that was about 6,500. That's about 6%. So let's go Qs. I'm just going to look on the 1 year chart. I think you would have to do, let's call it 570. So I think, something like a 600, let's go out like sort of the same time period. And by the way, like this could be this is the kind of trade that could be decided by tomorrow, right?
Certainly. Yeah.
Which is cool though, because if you put it on right now with the worry of Nvidia going lower and it kind of triggering the final retest of these recent lows that we've seen, and Salesforce, everything we started the show with, it, imagine that all was bad tomorrow. We woke up tomorrow and it's all bad. This would be great timing. Now imagine everything worked out positively tomorrow and you saw a gap higher of like 1% in 1% in SPX and 1.5% in Qs or more. You could just take this thing off real quick for a small loss. Not small, but it was a little bit of a loss, but that's why you do it, right? Like you don't want to like then sit around and wait for the entire story to change. It's like, all right, I did it. I was kind of wrong right out of the gates. I'll wait a little bit and see what happens next.
Right.
So just going out to like March 31st, if we do a put spread, and let's kind of do, let's see. I'm just going to take it down to like kick it off at 600 and we can kind of see. So this is a 575 that we're looking at.
Okay.
I just want to see that kind of on a yearly chart. So this is essentially the recent lows that we've reached, and I'm talking the recent lows over like the last 2 weeks. It basically starts to kick in. Your break even is right near those lows, and I'll zoom in so you can see. So this is your break even, like 595.50 on this, paying $4 and something for up to $20 and something. So I think this is the type of thing where if Nvidia was bad, if CRM was bad, all of that, then we're quickly going to be back retesting these lows, and you're going to be in the driver's seat in something like this. Now, if we gap higher tomorrow and the Qs are like back near highs, you're going to be taking this thing off over the next, who knows, but you could probably get out of this thing for 3 something if that were the case, in which case, I would look at this as, you have a window out till the end of March where you're spending $4.50 to protect up to $20.50. And if you're wrong, you're taking it off for like $1 or $1.50 loss. That's how I would look at this. I would wait to see what Nvidia does. If they gap higher and hold the gains and all, maybe on Friday you take this thing off for like $3 and you're like, all right, whatever. I risked $1.50 because it's not going to go to zero, obviously. And if you're correct and Nvidia doesn't hold gains, or Nvidia gaps lower and the Qs are back retesting these lows, you're going to be like, all right, thank God I did that before Nvidia printed.
Yeah, totally.
And that's, by the way, one of the big mistakes that people make overall in options is they have something that's, you have a thesis. You're right. Like initially you're wrong. I think in those cases, taking those trades off for a small loss and just kind of waiting, and perhaps trying to put it on later at better strikes. Often me waiting around for everything to come back towards my trade, I generally just find that's not a great way to trade, because the effect that like decay and all will have on you is you'll finally get your move and it'll be too late. So this is the type of thing where I would look at it as, I'm spending $4.50 on this thing, and I'm going to take it off if I'm wrong out of the gates, like immediately over the next 3 days. And I'm going to take it off for like $3 or whatever, if that's the case. And so I'm looking at this more as like risking 150 to have like something that could really work out longer term.
All right. I'm just reading a question here from Epic Chaos. What's the implied move for Intuit? The bar feels very low for them Thursday. Intuit, I thought, did Intuit not already report?
It's up 4% today.
No, Intuit is on Thursday, excuse me.
Feb 26. Yep.
All
right. So real quick, before I get to the expected move, the prior moves were, so in November was 4%, in August was 5%, in May was 8%, and in last February, 13%. We're into like a stretch where I don't even know. That's not seasonal. That's just the market was crazy back then, I think. But this thing, man, I'm going back to the year before, like 2024. This thing moves like 8%, 7%, 6%. Didn't move at all that 2 Februaries ago. So anyway, that's the setup. It's about 7.5% right now. Who asked the question?
Epic Chaos.
Epic Chaos. Nice. So I assume Epic Chaos is bearish. No, I'm kidding. Ask if which way they're looking. Oh my God. So this is an AI disruption chart right there.
Big time, yeah.
I mean, like, look at that.
This is like mildly a ground zero name. If this is, I would say this is pretty much right up there with the CRM.
Here's what I would say about a company like this. I mean, first of all, that's a 5-year chart we're looking at.
Oof.
Do you see that line?
Yeah, I mean, we're
right there.
Right here, right now.
Right there. It was 800. When was this? In July of last year. I mean, so here's obviously a company like this is going to get disrupted by AI. But like, aren't they also the type of, don't they have like a ton of consultants and everything?
Yeah, I believe
Isn't
so.
that
Yeah.
exactly the type of company that also could have a massive turnaround because of the productivity gains of all of these new agents,
The
where
efficiencies.
their efficiencies are going to be out? So this is one of those wild ones. I don't know what symbols it's going to be, but we're going to look back in a year at some charts like this where these things have completely reversed and become darlings, right? Similar to like Google last year. And I'm not saying that on Intuit because I don't know which ones it's going to be,
Yeah.
but I think it's kind of interesting to start looking them over and sort of doing research, because if you remember Google before it became the darling, um, it was sort of like left for dead behind Microsoft, right? Everybody was like, Microsoft's going to win and Google's going to lose, and then Google became a darling, right? So my point on something like Intuit is, I don't know if it's going to be one of them, but when I see a chart that looks like that, I'm like, man, the risk reward that they are one of those is massive. So
Mm-hmm.
you're going to know if you're wrong, it's going to just keep going lower and then you get out of it.
Mm-hmm.
But if you're right, this is the type of thing that could go back to, I mean, 650. Let's look at the 1 year expected move. So for tomorrow, we buried the lead. I think I said it, but it's about 7.5%. Like, but the options market is only pricing sort of the potential by the end of the year for this thing to get back to 500. I kind of feel like if the story changed, this thing would be a lot higher than 500. So that's the type of thing where you might want to scatter if you're bullish and you're looking for a recovery.
Yeah.
I wouldn't play earnings, who knows? But I would look out further in the year and I'd be doing little, like sort of little, not little, but like, let's say like 20 and $40 call spreads to the upside, maybe. And
Okay.
what would happen is if this thing started to turn around and you started to see a move like this into the end of the year, and this thing
Yeah.
is suddenly back to like 600 or 550 or something,
Yeah.
you could have little tactical, like a 425, 450 call spread just sitting out there waiting for you. Let's do it. Let's just look at one to see what kind of price that trades at. So
Okay.
let's do, and then we can get out of here. But let's look at like a July, let's just say. And then when I say July, yeah. What did I say? 450, 500?
I think so. Yeah.
Or 450. Well, let's look at a couple up there. That might even be too wide. 450. Okay. So that one's kind of interesting. So just so we have a baseline here. So the 450, 500 call spread expiring in July is you basically pay 10 to make up to 40, right? So it's a 4-to-1 risk reward up there. And you can sort of see it on the chart is, you just basically need this thing to get back to, you're at a max gain on that if it gets back to the level that it was at the end of January, so 20 some days ago, right? And you have all the way out until July to do it. The less risk version of a trade like that would be like a 450, 470, or let's say you did 430, 450. That's risking 5 to make up to 15. And so I would look at it that way. It's like, I don't want to risk too much. I don't want to like take on the entire stock right here in case it's finished and they're going to zero. I want to have like little tactical trades, and maybe you do a couple of these spread out through the rest of the year. Like you do one in May for a quick turnaround that's like a little bit lower and maybe 10 points wide. And then as you go farther out into the year, maybe if you have one out in, November or October or something, you go, maybe that's the $50 wide one you do. You know what I mean? So you go like a 10, a 20, a 50, and you kind of scatter them throughout the year.
Okay, smart.
Yeah.
Little more insight here. IGV 10% is Microsoft, Palantir 8%, Oracle 8%, Salesforce 7.5%, AppLovin 5%, Adobe under 5%, Intuit is about 4% of the IGV. Just
Okay.
give you a little
How
idea
is
for
AppLovin 5%? That's crazy. What is that market cap? I had no idea they were that big.
I mean, I think they're in so many platforms, you know?
Yeah. So 145 billion.
Yeah,
And Salesforce is 180 billion. Yep.
that's
And then the
nuts.
other ones are obvious. But yeah,
Right. You
Intuit.
wanna do can you do, Snow real quick?
No, let's look at Snow, yeah.
Wellbeing Warrior says, "I'm thinking to sell the Snow 150 put for next week."
Uh, 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 uh. Are there any of these names that have reported recently with a chart that looks like that have puked further? Can you think of any in like the last week or two? Because here's your
Not really, not off the top of my head, nah.
Okay. So just to start, so the expected move is 150 basically, right? So you are looking at the correct strike. You are making a bet that I would say is you have this double bottom right here, right? This week at 155 and going back into the beginning of February at like roughly the same level, right? So by selling the 150 put, first of all, let's see what it is. What is this thing trading? 150. It's $3.15, let's say. And this is it on the chart. Yeah. Do you want to own Snow? Because what I would is if you're wrong, like, yeah.
You're stuck.
That's why I was asking, like, are there examples of something like of this level that's reported in the last couple of weeks that like puked further?
What about like a Unity?
Did it already report?
They reported on the 11th.
This.
Look at that chart.
All right, so let's look.
Is that I think that's a good one?
Yeah.
Okay, sweet. Yeah.
Yeah, and this went down to like, look at this. Down to that low, and now it's bouncing a little bit.
What do you know?
So now let's come back to Snow and let's look at like a long-term chart. And what I'm always looking for is like, what can I hang my hat on? Like, is there anything that could defend me?
It's not real clean, is it?
It's like 140. So your risk is a Unity. It goes down to like literally like 120 or 115.
Okay.
So if that's a realistic worry, which I don't know if it is, what does Snowflake even do? I don't even know. They do, I mean, I know they're cloud.
Snowflake, the cloud for your cloud. I made that up. That's a Parks and Rec reference.
What was that old meme? Like, we put a cloud inside your cloud. Like, remember with what's the Pimp Your Ride guy?
Exhibit,
right? Yeah, we put a cloud inside your cloud so you can cloud. Yeah, their company description. It's like, I don't know what that is. Oh, they're based in Bozeman. That'd be a cool place to work.
Wellbeing Warrior says data warehouse. That's probably good. That's probably a pretty good way to describe it.
Oh, that's a very bullish way to describe it right now in current conditions. So your risk is, a total just puke down to like 120, let's say. So, and you're only getting $3 for that put. Let me just like price out some put spreads that are down near there. So, 150, 149, let me see, 150, 145. Yeah, you're eating up your gains. I would just say you better want to own Snow at 150. You're probably going to be correct. You're basically right at the expected move, but if you're selling a cash secured put, you better want to own Snow at 150, because if it goes through it, you're going to be watching it and being like, this thing needs to bounce. Something like this that feels a little bit like picking up pennies on the train tracks, where what I would rather do is sort of like what we were talking about with Intuit. It's like, I think I'd rather position for a turnaround story in these things.
Around.
than try to make $3 on something that's down $100 in the last couple of months. You know what I mean?
Mm-hmm.
So yeah. So only if you're a willing buyer there, and the put spreads don't look that great because vols, you know, kind of canceling each other out.
All right, CC, you ready to
Yeah.
wrap it up here?
Yeah, let's do it.
Awesome.
We need an outro.
We need an outro. I mean, we can run the intro as the outro.
There we go. We don't have to.
We'll be all eagerly awaiting NVIDIA earnings.
Yes.
At 4:20 today. I'll be in the SDN room breaking the news if anyone wants to tune in there and get some of the breaking news in real time and get some analysis. But that's going to wrap it up for us on, Options Unchained here for this week. CC, will you be around in the SDN room on Friday?
I might be skiing on Friday. A buddy of mine is having a big company party up at our nearby mountain.
Awesome. I know
which
y'all
will be
have
one of the rare times I've skied this year because it's been golf weather.
Exactly.
Yeah.
So you take your ski days when you okay, cool. All right, folks. Good luck if you are trading the rest of the day or after hours. Of course, we'll be eagerly awaiting our software name earnings and our Nvidia earnings. And CC, we'll check in with you a little bit later.
Awesome.
All right,
see you guys.